Did you know over 60% of Floridians have no idea how new state laws are changing their financial future starting this year? That's right. Quietly passed bills are already in effect, and they're targeting your wallet, your rent, your insurance, and even your retirement savings. These aren't hypothetical changes. They're real, and they're happening right now. Some laws are dressed up as reforms, but they come with hidden consequences. Imagine waking up to find your rent has jumped, your tolls have doubled, or that your PayPal account just got flagged. All because of changes you didn't even know were passed. While some of these laws offer protection, others are quietly shifting power away from everyday people and into the hands of large corporations and state agencies. So, how safe is your money in Florida right now? Stay with us, yes, because we're breaking down 10 new laws you absolutely need to know before they hit your bank account. Number 1. Florida expands. Digital sales tax. Think streaming is just entertainment? Well, in Florida, it's now a taxable luxury. Under a new law passed quietly earlier this year, digital services like Netflix, Spotify, Adobe Creative Cloud, Canva, Dropbox, even Zoom and Microsoft Office subscriptions are now subject to Florida's sales tax. That means your monthly subscriptions just got more expensive, and most people won't even realize why. The change doesn't just hit your movie nights or music playlist. It affects entrepreneurs and freelancers who rely on online tools for work. Graphic designers, video editors, students, anyone using digital platforms could see their monthly expenses go up by 6% or more. Florida lawmakers argue this tax modernizes the system and ensures fairness between online and in-store services. But critics say it's a sneaky way to increase revenue, without calling it an income tax. And the worst part? Many people won't even notice until their credit card bill creeps higher month after month. So what can you do? First, review all your subscriptions, from streaming to business tools. Are there services you don't use anymore? Cancel them now. For the essentials, consider switching to annual billing plans, which often come with discounts that can offset the new tax. You can also bundle services or share family plans where possible to lower costs. This might seem like a small change, but over time, it chips away at your monthly budget. And that's exactly why it's number 1 on our list. Because if something as basic as watching a movie or using an app is now costing you more, what else is being quietly taxed next? Number 2. New insurance law could leave you vulnerable. Florida is known for its hurricanes, but what happens after the storm might shock you even more. A new insurance reform law passed under the banner of fraud reduction is now making it much harder for homeowners and drivers to file claims. Even when the damage is real, here's the kicker. Insurance companies now have more legal protection, while you, the policyholder, have fewer options to fight back. This means if your roof is damaged, your car is totaled, or your home floods, you could face delays, denials, or reduced payouts, all legally allowed under the new rules. In some cases, you may have to pay out of pocket first, then fight for reimbursement later. Lawmakers say the law will lower insurance premiums over time, but so far, many Floridians are still seeing their rates skyrocket, while losing critical protections. It's a double hit: higher costs and weaker coverage. So what can you do about it? First, don't wait for disaster to strike. Review your insurance policy today. Make sure you understand your coverage, deductibles, and exclusions. If you live in a hurricane-prone zone, consider adding flood insurance or windstorm riders, even if it costs more upfront. It could save you thousands later. Also, document your belongings now. Photos, receipts, videos. In the event of a claim, proof matters more than ever under the new law. And finally, talk to your insurer about what's changed. Don't assume you're covered just because you were last year, because in today's Florida, surviving the storm is just the beginning. The real danger might be in the fine print of your insurance policy. Number 3. Dynamic toll pricing. If you think tolls in Florida are already expensive, brace yourself because a new law is about to make your morning commute a financial guessing game. Florida has officially rolled out a dynamic toll pricing system, which means tolls can now rise or fall in real time, depending on traffic levels. Sounds high-tech, until you see the bill. During rush hour, tolls can spike by 30%, 40%, even 50%, especially in high congestion areas like Miami, Orlando, and Tampa. Imagine driving the same route every day, only to find out that on Tuesday your toll was $3, and on Thursday it was $7 for no obvious reason. The unpredictability alone has commuters frustrated and worried. The official explanation? It's meant to reduce traffic. But in reality, many people feel it's just another way the state is squeezing money from anyone who has no choice but to drive to work. And let's be honest, in a state where public transportation is limited, most Floridians do drive to work. So what can you do to protect your wallet? Start by studying your regular route. Pay attention to which toll plazas show the highest price jumps during peak times. If possible, shift your commute by 15-20 minutes earlier or later. This small adjustment can save you money every single week. Next, look into SunPass Plus programs or Express Lane Passes, which sometimes offer small discounts or more stable pricing. And if you work remotely even once or twice a week, take advantage of it. Every skipped commute is money saved. This new toll system might seem like a small inconvenience, but over months and years, it can quietly drain hundreds of dollars from your budget. And the worst part? Most people won't even realize how much they're losing until the numbers add up. Number 4. Florida retirement changes. If you're a public employee in Florida, whether you're a teacher, police officer, firefighter, or state worker, you need to pay close attention. A major change to the Florida retirement system, FRS, is quietly reshaping how much you'll get when you retire. And it's not in your favor. Under the new law, the state's contribution to new employees' retirement accounts is being reduced. That means if you're just starting your career in public service, the state is now investing less into your future than it did just a few years ago. It's part of a broader effort to shift responsibility from the government to the individual. And many experts say it's a move toward a retirement at your own risk model. What does this mean for you? Well, if you're relying solely on the FRS for your golden years, you could end up with thousands less than expected. And here's the twist. Many new employees don't even realize this has changed because the enrollment materials haven't fully caught up. So, how do you protect your future? First, if you're in the FRS, log into your account now. Check your contribution rate and compare it to past years. You may need to increase your personal contributions through voluntary savings plans like a 403(b) or Roth IRA. Also, don't wait until your 40s or 50s to start planning. The earlier you start, the more time your money has to grow, and the better chance you have of building a secure retirement on your terms, not the state's. Because here's the truth. Florida's retirement system isn't collapsing, but it's quietly shifting the burden onto you. And if you're not prepared, you could be left with less than you deserve. Number 5. Homestead Exemption Reform. Florida's homestead exemption has long been a financial lifesaver for homeowners, offering major property tax reductions on your primary residence. But in 2025, a new reform changes how those benefits can be transferred when you move, and it could cost you thousands in unexpected taxes. Under the new rule, if you move to a different county or upgrade to a significantly more expensive home, your ability to transfer your homestead exemption is now limited or reduced. That means even if you've owned a home in Florida for years and were enjoying lower property taxes, those savings might not follow you when you move. Imagine selling your modest home in one county and buying a slightly larger one in another, only to discover your new tax bill is double what you expected. For retirees downsizing or families upgrading, this law could hit hard and fast. Lawmakers argue the reform prevents people from gaming the system, but the reality is it punishes longtime residents who simply want to move without losing their tax protection. So, how can you stay ahead? Before listing your home or signing on a new one, consult a local tax advisor or property appraiser. They can help you calculate your expected taxes under the new rules and may even suggest strategies to minimize your increase. If you're planning to move, time it carefully. Some exemptions are easier to transfer within the same tax year or the same county. Also explore whether you're eligible for senior, veteran, or disability exemptions, which can help offset the increase. Bottom line, what used to be a smooth transition between homes can now become a financial trap if you're not careful. Don't get caught off guard. Know the rules before you move. If this video opened your eyes, let us know which law shocked you the most. We read every comment. We put hours into breaking this down for you, so if you found it helpful, hit that subscribe button. It's just one click, but it means the world to us. Number 6. Florida bans local rent control. In a move that's sending shockwaves through Florida's rental market, a new state law now bans local governments from setting rent control policies, no matter how high prices climb. That means even if your city is facing a housing crisis, your local officials can't step in to slow down rent hikes. This law was passed after some counties, like Orange County, tried to introduce rent caps to protect residents. But now, all cities and counties across Florida are blocked from enacting any form of rent control, even during emergencies or housing shortages. The result? Landlords now have more power than ever, and some are already using it. In places like Miami, Tampa, and Orlando, rent prices have surged by over 25% in the last year alone. For working families, students, and retirees on fixed incomes, this law could be the breaking point. So what can renters do to protect themselves? First, lock in a longer lease if possible. A 2-year lease might shield you from major increases, at least temporarily. Also, don't be afraid to negotiate your rent or ask for incentives like free parking, reduced deposits, or maintenance perks. If you're struggling, check for local rental assistance programs. Many still offer help, even if rent control is off the table. And always document everything: communication with landlords, maintenance issues, and payment history, so you're legally protected if things get difficult. This law might have passed quietly, but its effects are loud and clear. Your rent could go up, and there's not much your city can do about it. So whether you're renting now or planning to soon, stay informed and prepared. In today's Florida, knowing your rights is the only control you have left. Number 7. New bank garnishment law. Think your money is safe in your bank account or in apps like Cash App, Venmo, or PayPal? Under a new Florida law, it might not be as protected as you think. In 2025, the state expanded its bank garnishment rules, giving creditors more power to access your funds, even from accounts that used to be harder to touch. Here's what's changed. Creditors can now garnish joint accounts, even if the other person on the account isn't the one who owes money. And yes, this includes peer-to-peer payment platforms where many people store balances for convenience. So if you're keeping a few hundred or a few thousand sitting in Cash App, it could be seized to pay off a debt without much warning. Even worse, you may not receive a full explanation before the garnishment happens. That's left many Floridians blindsided, especially younger adults or gig workers who rely on digital wallets for daily transactions. So how can you protect your money? First, limit how much you keep in digital payment apps. Transfer funds regularly into your main bank account, especially if it's under your name only. If you share a joint account with someone, consider setting up separate individual accounts, especially if either of you has old debts, lawsuits, or credit issues. Also, monitor your account activity closely and respond to any legal notices immediately. Garnishment can often be challenged, but only if you act fast. This law might sound technical, but its impact is very real. If you're not careful, money you thought was safe could disappear overnight. In today's financial climate, knowing where your money sits and how vulnerable it is more important than ever. Number 8. Gig worker law changes. If you drive for Uber, deliver with DoorDash, freelance online, or run a side hustle, this one's for you. Florida has introduced a new law that redefines how gig workers are classified, and it could have a big impact on your taxes, benefits, and even your legal protections. The state now offers clearer guidelines that separate independent contractors from full-time employees. That sounds helpful until you realize it gives companies more freedom to avoid offering benefits, like health insurance, unemployment coverage, or paid leave. For gig workers, this means you're officially on your own, legally and financially. What's worse, many gig workers don't realize they're responsible for self-employment taxes, which can be as high as 15.3%. If you're not tracking your income and expenses properly, you could face a hefty tax bill next year, or even IRS penalties. So what should you do if you're a freelancer or side hustler in Florida? First, start tracking every dollar you earn and every expense you can legally deduct. Use apps or spreadsheets to stay organized. Second, consider opening a separate business account to keep your finances clean and easier to manage. It's also smart to speak with a tax professional before filing your next return. Even if you only make a few $1,000s on the side, the new rules mean you need to report it correctly and consistently. In short, Florida's new gig law means more clarity for companies, but more responsibility for you. So don't wait until tax season to find out where you stand. If you're building your own income stream, protect it like a business, because that's exactly how the law sees it now. Number 9. Public Assistance Overhaul. Here's a change that's flying under the radar but could hit Florida's most vulnerable families the hardest. A new law has reshaped how income is calculated for public assistance programs like SNAP, food stamps, Medicaid, and housing support. And the results are catching people by surprise. In the past, eligibility was based on straightforward income brackets. But now, Florida has introduced a broader definition of income, which includes things like gig work, sporadic freelance income, and even certain types of government aid. That means families who are earning the same as before may now be told they no longer qualify, just because of how the numbers are counted. And it gets worse. Some people are losing benefits without clear explanations. Imagine working a few extra hours or picking up a side job, only to find out it disqualifies your child from health coverage or reduces your food assistance by half. For many low-income households, that's a devastating blow. So, what can you do? First, don't guess. Use Florida's online benefits calculators to see if your situation still qualifies. These tools have been updated with the new formulas. If you're close to the eligibility line, consider adjusting how and when you report your income. Next, keep detailed records of your pay stubs, work hours, and any extra income. If your benefits are cut, having this information ready makes it easier to challenge the decision or apply for alternative programs. Lastly, stay in touch with local nonprofits and advocacy groups. They often know how to navigate the new system faster than government offices do. In Florida's new benefit system, earning more doesn't always mean keeping more. Be proactive, be informed, and don't get caught off guard. Number 10. New Crypto Reporting Law. If you thought cryptocurrency was the Wild West of finance, Florida just put up a new sheriff. A newly passed law now requires anyone making crypto transactions over $10,000 to report them to state authorities, bringing a whole new level of government oversight to your digital wallet. The official reason: to prevent money laundering, fraud, and illegal transfers. But critics argue this is just the beginning of more aggressive crypto surveillance, which could make life harder for everyday investors and small-time traders who are just trying to build wealth. Here's what the law means in plain English. If you buy, sell, trade, or transfer over $10,000 worth of crypto in a single transaction, even across multiple coins, you must report it. That includes popular platforms like Coinbase, Binance, Kraken, and even private wallets. Failure to report? That could lead to hefty fines or legal action, especially if the state suspects you're hiding assets. And since crypto isn't anonymous anymore, state agencies now have more tools to track activity than ever before. So, what should you do? First, start keeping detailed records of every crypto transaction: buy dates, amounts, wallet addresses, and exchange rates. Many platforms offer downloadable reports. Use them. Second, talk to a crypto-savvy accountant or tax pro, especially if you're investing significant amounts. Also, don't assume the IRS is the only one watching. Florida is now in the game, and their rules might be different from federal regulations. Whether you're a seasoned investor or just dabbling in Bitcoin, the message is clear. The state is watching, and they want their share. So if you're in the crypto world, play smart, stay transparent, and treat your digital assets like real money. Because now, legally speaking, they are. Florida's economy is shifting fast, and these 10 new laws prove it. Whether it's stealthy tax hikes on digital services, tightening rules on public benefits, or new ways the state can reach into your wallet, one thing is clear: what you don't know can hurt your finances. The truth is, most people won't feel the impact of these laws until it's too late. When their rent jumps, their insurance denies a claim, or their crypto wallet gets flagged. These aren't just policy updates, they're real-world changes that can affect how you spend, save, live, and retire. That's why staying informed isn't just smart, it's absolutely necessary in 2025 Florida. But here's the good news. You now have the information most people don't. You've just taken a major step toward protecting your money, your rights, and your future. And the more you stay ahead of these legal shifts, the more power you have to adapt, respond, and even benefit from them. So here's your next move. Take action. Review your subscriptions, recheck your insurance policy, track your income and spending, talk to professionals if you need help, and most importantly, keep learning. Because laws will keep changing, but the people who thrive are the ones who stay ready. And hey, don't keep this to yourself. Share this video with friends or family living in Florida. Let's build a community of people who aren't just surviving these changes, but navigating them smartly. Remember, in today's world, information isn't just power, it's protection. And you're now ahead of the curve.